I want you to imagine sitting in front of your screen, charts glowing, indicators moving, and a single question burning in your mind. When is the right moment to enter? When is the exact moment to exit? Most traders chase the market like shadows, always one step behind, always a little too late. But there's a method, a philosophy developed over a century ago by a man who lived and breathed markets, Jesse Livermore. Livermore was not just a trader. He was a student of human behavior in its rawest form. He understood that markets are not numbers on a chart. They are emotion incarnate, a reflection of fear, greed, hope, and hesitation all tangled together. Every top, every bottom, every explosive move is preceded by a subtle shift in sentiment that most traders miss because they are watching the wrong signals. They watch prices. Livermore watched people. Timing tops and bottoms is not about prediction. It's about recognition. It's about feeling the pulse of the market and then responding without hesitation. Livermore had a rule he lived by. The game taught me the game, and it did not spare me the rod while teaching. He meant you can read all the books, study all the charts, and still be blindsided if you ignore the emotional currents underneath. Every swing has a story, and if you know how to read it, you can anticipate where the market wants to go before it actually moves there. Think about the last time you entered a trade. Did you feel fear creeping in? Excitement? Did you hesitate or act impulsively? Those moments define you more than the charts themselves. Livermore said, "It is not good to be too curious about all the reasons behind a market move. You must watch the market and follow the trend." The genius here is subtle. He did not wait for confirmation from economic reports, news, or other traders' opinions. He observed the rhythm, the volume, the subtle accelerations and decelerations in price movement. He listened to the market as if it was speaking to him. In this video, I will walk you through the Livermore method, not as a rigid formula, but as a psychological lens. You will learn how to identify the telltale signs of a top forming, the whispers of a bottom, and the exact moments when hesitation turns into opportunity. This is not about chasing the perfect candle or the ultimate indicator. It is about aligning your mind with the market's heartbeat and making decisions that feel almost instinctive. Markets are mirrors. They reveal your fears, your impatience, your pride. And just like Livermore discovered, the first step to precision is self-awareness. You cannot time the market if you are constantly reacting to it instead of observing it. Precision comes from discipline, observation, and an intimate understanding of human behavior under pressure. Every tick on the chart is someone's emotion crystallized into price. Your job is to see the pattern, feel the shift, and act before the majority reacts. And this is where most traders fail. They want the outcome without mastering the process. They want to see the top and bottom and profit instantly. But they haven't trained themselves to notice the subtle accumulation, the hesitation, the minor fluctuations that foreshadow massive moves. Livermore's method is about noticing these tiny signals, about learning patience, and about knowing when to trust your analysis versus when to step back and let the market reveal itself. As we move to the next section, we will dive into the inner conflict every trader faces, the paradox between fear and greed, between hesitation and impulsive action, and how this invisible battle dictates whether you catch the move or get caught by it. Understanding this internal struggle is critical because without it, all your timing strategies are just guesses. I need you to picture this. The market is moving. Prices spike and drop, volume surges, and there's a tension in the air that you can almost feel through your screen. You know something is about to happen. Maybe it's a top forming or a bottom taking shape. Every instinct tells you to act, yet every fear whispers hesitation. This is the paradox every trader experiences. Fear and greed fight inside you. Your rational mind says wait, your gut screams go. In that split second, your decision can make or break you. Jesse Livermore understood this tension more than anyone. He wrote about it in his journals. The market does not beat you. You beat yourself because you cannot control your emotions. Think about that. Every top you miss, every bottom you enter too early, is not because the market tricked you. It's because you're in a conflict, paralyzed your execution. You were waiting for certainty that never comes. The market never confirms what you hope it will. It moves, and your hesitation is its favorite prey. Modern traders face the same dilemma, only amplified by technology. We have endless charts, indicators, alerts, and news feeds. And yet, despite all this information, the internal battle remains unchanged. The market doesn't care about your indicators. It responds to human emotion. When everyone is greedy, the top forms. When everyone panics, the bottom arrives. The trick is not predicting the crowd, but understanding your reaction to the crowd. Will you join the herd, or will you observe and act with calm precision? I remember a moment early in my trading career. I spotted what looked like a perfect bottom forming after a sharp decline. The price was bouncing slightly, volume was rising, yet fear held me back. I hesitated, rationalizing, waiting for more confirmation. Within minutes, the market reversed again, and the opportunity evaporated. The frustration I felt wasn't anger at the market, it was disappointment in myself. Livermore would have called this a classic psychological trap, the fear of acting versus the fear of being wrong. The market punishes both. Livermore's philosophy here is clear. The desire for action is natural, but the impulse to act prematurely is deadly. He taught that you cannot suppress emotion, but you can understand it. You can recognize when fear is your enemy and when hesitation is your ally. Timing tops and bottoms is as much about mastering yourself as it is about reading charts. You must learn to sit in the tension, to feel the internal tug of war without letting it dictate your actions. This inner conflict also explains why most traders lose money. They enter trades because they want the thrill of winning or the reassurance of action. They exit too early because fear tells them the move is over, or too late because greed convinces them the price will go higher. Livermore's edge was his ability to detach emotionally while staying mentally alert. He could watch the market like a predator, waiting for the exact moment when the herd was overextended, when the tipping point had arrived. He knew the market would reveal the top or bottom if he stayed disciplined. In the next section, we'll break down the psychological traps that keep traders from acting decisively. We'll explore why hesitation, overanalysis, and self-doubt are far more dangerous than the market itself. Understanding this is critical if you want to master the Livermore method and align your mind with the rhythm of tops and bottoms. Let me tell you the harsh truth. The market doesn't care about your logic, your analysis, or your gut feelings. It cares about reactions, and your mind, constantly swinging between hope and fear, is the reason most traders fail. Every top and bottom is littered with traps. Traps not in the market, but in your own psychology. The market sets the stage. Your mind writes the drama. Jesse Livermore observed this over decades of trading. He said, "The human side of every person will always be the weakest link." Think about that. You can study patterns, develop indicators, and even have a system that works for months. Yet one moment of indecision, one slip of ego, one surge of impatience can destroy all that work. Most traders lose not because they misread the market, but because they mismanage themselves. The psychological traps are subtle but deadly. First, there's hesitation. You spot a potential bottom forming. You see the signs, a spike in volume, a pause after a sharp decline, a rebound in price. But you hesitate. You ask for confirmation, for validation. By the time you decide, the market has moved. You've let opportunity slip. Hesitation is the silent killer because it disguises itself as prudence. Livermore warned against this endlessly. He said, "It is not good to be too curious about all the reasons behind a market move." In other words, the more you overanalyze, the slower you act. And the market punishes slowness. Then there's impulsive action, the opposite trap. You see a spike and immediately jump in without context, without patience. This is greed masquerading as decisiveness. Livermore experienced this himself countless times. He knew that entering a trade too early, before the pattern fully reveals itself, is just as dangerous as not entering at all. Timing requires balance, and balance requires emotional discipline. Next is the trap of attachment. Traders often become emotionally invested in their positions, hoping for validation or fearing loss. You've probably experienced it. The market dips, and your fear tightens its grip. You hold longer than logic dictates, believing the trend will reverse for you. Or after a gain, you exit too early because the fear of giving it back outweighs the desire for full profit. Livermore called this letting your emotions dictate your strategy. The market doesn't reward sentiment. It rewards observation and execution. The final trap is denial. Sometimes the top or bottom is clear, yet traders refuse to acknowledge it because it contradicts their narrative. Maybe you've convinced yourself a declining stock is a buying opportunity, or a rising asset is still cheap. Livermore taught that the market is the ultimate truth. If it shows weakness, you must accept it. If it shows strength, you must respect it. Denial clouds judgment and ensures losses. Here's the brutal takeaway. Timing tops and bottoms is not a math problem. It's a psychological challenge. If your mind is cluttered with doubt, emotion, or impatience, no pattern, indicator, or strategy will save you. Livermore's genius was in identifying these traps in real time, separating signal from noise, and acting decisively when the pattern and psychology aligned. He didn't rely on hope. He relied on observation, discipline, and self-mastery. As we move into Section 4, I will show you exactly how Livermore would approach these traps. You'll learn how he calibrated his mind, disciplined his emotions, and used his philosophy to recognize tops and bottoms with precision. This is where psychology meets execution, the moment where insight becomes action. Let's step into Livermore's shoes for a moment. Imagine the early 1900s, chaotic ticker tapes, rumors moving faster than news, and traders panicking over every twist in the market. Amid all this noise, Livermore developed a philosophy that turned chaos into opportunity. His core belief was deceptively simple. The market is never wrong, and your only job is to align yourself with its momentum. He said, "Trade only when the market confirms your opinion." This is where most traders fail. We think we need to predict. Livermore knew prediction is an illusion. Tops and bottoms cannot be predicted with certainty, but they can be recognized if you understand patterns, volume, and, most importantly, psychology. Every top forms when the market reaches a point of collective euphoria, when hesitation and doubt finally succumb to greed. Every bottom forms when fear overwhelms, panic sets in, and the last weak hands capitulate. Livermore watched for these signals in real time. For him, timing was a mental exercise as much as a technical one. He had rules. Never act on hope. Wait for confirmation. Watch volume carefully. A top or bottom without increased activity is a trap. Observe price behavior in context, not in isolation. Cut losses quickly, let profits run. These principles remain relevant today. Imagine a modern trader watching a volatile stock spike on news. The crowd rushes in, fueled by FOMO. Livermore would look beyond the price movement. He would ask, is the volume natural, or is it fueled by speculative greed? Are there subtle signs of exhaustion in the advance? Are small investors panicking into or out of the position? In other words, he would measure emotion, not just price. Livermore's genius was also in patience. He would often sit through entire days, or even weeks without taking action. This is why he could capture extreme tops and bottoms with surgical precision. He didn't chase. He let the market reveal itself. Timing is not a race. It is an alignment. You wait until the pieces fall into place, then act decisively. He warned against early entries, saying, "It is not the big trades that make the big money, it is the correct ones." Acting too soon or too late is far costlier than missing a trade entirely. He also emphasized emotional discipline. Markets are never wrong, opinions often are, he wrote. This means that even when the world feels irrational, the market's behavior is the ultimate indicator. If you respect this principle, you stop fighting the trend. You stop letting fear and greed control your execution. You start seeing tops and bottoms not as mystical events, but as logical conclusions of human behavior revealed through price and volume. Livermore's perspective teaches us that precision is a byproduct of patience, observation, and self-mastery. You don't force a top or bottom. You wait until the market offers clarity. You act decisively once the signal aligns with your analysis and your mind is calm. He transformed trading into a disciplined science of observation, And this is exactly what modern traders must learn to do. Observe, resist emotional impulses, and only act when the evidence aligns. Next, I will share a real-world story that demonstrates Livermore's method in action. A dramatic example of how he caught a massive market top and bottom using the principles we've discussed. You'll see the philosophy translated into high-stakes execution and the mental discipline required to succeed. Let me take you back to 1929, a time when markets were surging, optimism was sky-high, and the financial world was riding a euphoric wave. Prices seemed unstoppable. Everyone was buying, believing the rally would last forever. But Livermore saw something different. He noticed subtle signs others ignored, small volume spikes, hesitation at key resistance levels, and an undercurrent of nervous energy in the tape. Where others saw certainty, he saw tension. This was the moment where most traders would have jumped in, carried away by the collective greed. Not Livermore. He was patient, waiting for confirmation. He observed the subtle decline in the activity of major players and watched the small flips in price that indicated a shift in sentiment. Then, when the market revealed its weakness, he acted decisively, shorting the market at the top. He didn't just act on instinct, he acted with discipline. Livermore always emphasized that the key to timing tops and bottoms is to let the market confirm your analysis. He said, "The market does not beat you, you beat yourself." And this was the ultimate test of self-mastery. By waiting, he avoided the trap of impulsive action that ensnares almost every trader during euphoric runs. By acting only when the signal was clear, he captured a massive move downward as the great crash unfolded. Livermore's method wasn't about luck. It was about reading human behavior at scale. He recognized that tops occur when the majority has capitulated to greed, when euphoria clouds judgment, and when hesitation begins to appear in subtle ways. He watched the tape like a thermometer of collective psychology, detecting temperature changes no one else noticed. That's how he anticipated the 1929 market collapse, while countless others were blindsided. The same principle applies to bottoms. Take a sharp market decline. Most traders panic and sell at the lowest point, fearing further losses. Livermore trained himself to see the exhaustion in selling pressure, the small signs of accumulation, and the hesitation that indicates a bottom is forming. He understood that human emotion drives extreme moves. By observing and waiting for confirmation, he could enter near the bottom and ride the next wave upward, again turning fear into opportunity. Even today, in modern markets with complex algorithms and 24/7 trading, the psychology hasn't changed. Tops form when collective greed peaks, bottoms form when fear overwhelms. The signals are there, if you know what to watch. Volume shifts, sudden accelerations or decelerations, small hesitations in price action. But above all, timing requires mental discipline. Livermore's brilliance lay in his ability to master himself first, then the market second. This is the lesson modern traders must internalize. Precision comes from observation, patience, and discipline. You must learn to resist the urge to act prematurely. You must observe the market as it reveals its rhythm. You must recognize the subtle emotional cues of other participants, because every top or bottom is nothing more than the crystallization of collective human behavior. In the next section, I will bring this all together with a cinematic conclusion. We will distill the essence of the Livermore method into actionable insight for you, leaving you with a mindset you can carry into every trade, every market, and every decision. Let me leave you with this. Jesse Livermore's genius was not in complex formulas, charts, or indicators. His edge came from understanding people, yourself included. Every top and bottom is written in human emotion: greed, fear, hesitation, and panic. The market is a mirror reflecting the collective mind, and if you can read that reflection with clarity, patience, and discipline, you can act with precision when everyone else is blinded by impulse. Think back to everything we've discussed. The inner conflict, the hesitation, the traps of overanalysis and emotion. These are not obstacles, they are opportunities. Each moment of doubt is a test of self-mastery. Each sign of exhaustion in The market is a potential signal waiting for you to notice it. Livermore understood that the key to timing tops and bottoms is not chasing them, but watching, waiting, and recognizing when the market itself confirms the pattern. He didn't react to rumors, tips, or hope. He observed, he felt the rhythm, and he moved decisively when the stage was set. And that is the essence of the Livermore method. Observe without bias. You measure emotion without attachment. Wait for confirmation without impatience. Enter without fear. Exit without greed. Every decision becomes a reflection of discipline, not desire. Every trade becomes a statement of psychological mastery. Modern markets are faster, charts are more complex, but the human mind remains unchanged. The principles are timeless. Fear, greed, hesitation, and patience are constants. Your ability to recognize and manage them is the difference between winning and losing. Picture yourself in front of the screen, feeling the tension, noticing the subtle shifts, understanding the market's emotion as if it were speaking to you. The moment arrives. You act decisively. You're not lucky. You're not guessing. You are aligned. You are ready? This is what precision feels like. This is what mastery looks like. And this is what every trader chasing tops and bottoms should aspire to. Remember, every missed opportunity is a lesson. Every impulsive trade is a warning. Every disciplined, patient action builds skill that compounds over time. Livermore wrote, "It is not the big trades that make the big money. It is the correct ones. Focus on correct, not perfect. Focus on disciplined observation, not reaction. Focus on understanding yourself before trying to understand the market." So, I want you to reflect. Ask yourself, are you acting out of fear, greed, or true observation? Are you letting hesitation cost you, or are you waiting for clarity? Your next trade is not just a position, it is a test of psychological mastery. Apply the principles we've explored today. Watch for the subtle signs. Respect the market. Respect your mind. And when the moment is right, act with decisiveness. The market will always challenge you. But with patience, discipline, and a Livermore mindset, you can catch the tops and bottoms that define a trader's legacy. Comment below what lesson from Livermore will change the way you trade starting today.